with riding the bull, and they're certainly in control, not just the frontline index, which is above the 8350 mark, but take a look at the banking index as well, which has crossed the 18,100 level. So clearly we have getting support from that pillar of strength, the Bank Nifty index, as well as real estate, which is your top sectoral gainer. NBCC, Oberoi Realty are some of the high flyers there. Let's get in Rahul Shah as well to find out some wealth creation recommendations. But before that, Rahul, a quick call on the markets and where you see them headed in light of all that we've been through and the fact that we've relentlessly been moving higher.
I think if you look at the markets, we are in sync with the global markets. We've been performing in sync. So I feel obviously the key factors over here is monsoon and GST. What people is in monsoon, I think, has been good. In last few days of July as well as June. Also, we saw in the last week of June. So I think monsoon has taken care of. So now going forward is the GST and the corporate earnings, which is going to start from maybe second week of July. So we'll see. These are to be main focus over it, and if that goes through, I think I'm sure that markets are going to cheer. But even if it does not happen, I think monsoon and good corporate earnings will still back up the markets for more upside from here. So as of now, if you look at it, I feel that markets are going to go higher. And if you talk about Nifty wise, I think 8450, 8460 is going to be the near-term resistance for the markets, which looks like quite possible after today's session.
Rahul, your wealth creation ideas, what's on the list?
Two stock ideas, one from the auto space, Escorts. The stock has done quite well since last couple of years. I think going forward still it will do well. They're primarily because of, I think, 80% of the revenue comes from the tractor divisions, and they have 10 new launches in lineup in the next 2 years. Plus way they have been managing the businesses and way the return ratios have been in, so the focus has been quite good. Secondly, the focus on the dealer network and also the after sales service which they have been improving on. So I think these three primary factors, plus obviously the good monsoon, will help them more for the sales boost up. So I think available at quite reasonable valuations if you compare with M&M. Obviously it's M&M is a large conglomerate, but to compare directly with that, for the tractor divisions, it's 30% discount to it, and we expect that in terms of 15% revenue growth and 60% PAT growth for FY16 to 18. So that gives a lot of comfort buying Escorts at current levels, which can give us 30% returns in terms of the stock price from the current levels. Second stock being from the beverages space, 1% beverages, which got listed a few months back. So I feel still the stock has got a good story into it. They have a 5% market share currently, so we expect that 5% to go to 7.5%. And they were primarily basically focused on a single product, that 80% of the revenue used to come from the product called Mango Sip. Now they are diversifying into various fruit juices launches. So I think with diversification and their presence into a strategy being a rural mass area to shift to urban, so that will also help. So I think again, from a lower base, the company was formed in 97 with the launch of Mango Sips. I think if you look at the sector, if you compare, so it's quite cheap in terms of valuations, and way the company is growing, it will grow 49% in terms of top line from FY16 to 18, and 63% in terms of the PAT growth. So I feel reasonable valuation, good launches, and if you compare between the entire sector, I think and the entire shift from the carbonated drinks to fruit juices, that will still help them to grow much better. So I feel at 28 times forward, I think still gives at least a 25% upside from the current levels. So these are the two stock ideas from my side.
Okay, Rahul, good chatting with you. Let's wind it up then in this edition of Riding the Bull. But as the clamor for GST grows louder